Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for July 24th, 2023. We are recording this at 1 p.m. Eastern Time, and this is episode number 395. My name is David Kosmeter. I'm the creator of TimingResearch.com, and you should be seeing my screen right now. Today, I've arranged for Norman Hallett and Michael Filighera to join us again as today's guests, and the option professor is back to moderate, so I'm going to turn it over to him.
Okay, thanks, David, and welcome everybody to a bright Monday morning. This is the big week coming here with all the earnings that are going to be coming out. And we start the week, as I looked at my account, with the energy shares spiking up, which I like, and the industrial metals like Freeport-McMoRan, U.S. Steel, Alcoa, et cetera, spiking up, and also the agricultural stuff like Mosaic spiking up because of that attack over there in Ukraine. So those are three areas that I saw in my accounts were spiking up. Just wanted to let people know. And what we're going to do today is we're going to go over these markets, and we've got two great speakers here that are going to give you their insight. They both look at the market in a little different way, so that's great. And you're familiar with both of these guys, I'm sure, but for the precious few that are not, let's introduce ourselves. We're going to start out with Norm Hallett. Norm, a little background on yourself?
Yeah, just thanks. Appreciate it. I just my background is really was in options way back when. That's where I cut my teeth. But the last 20 years have been when I've had no teeth. The last 20 years has been really focused on the mental and emotional areas of trading, which I think is the missing link to most traders. And I think today, based on our pre-talk here, we're going to be probably looking at a lot of option opportunities, because when you get to volatile markets like this, options are a really good way to limit your risk, but still get the leverage that you want. So I'm really interested to hear what the option professor and Michael have in store for us too. But I'm going to comment a little bit more today on my basic expertise, which is the mental and emotional areas, and how the market can really talk to us about that, and how we don't necessarily need to talk back to it. What we need to do is ride with it. And so that's been my the disciplinetrader.com has been around for 20 years at that URL, and we continue to have a growing business helping traders with their mental and emotional capabilities. So that's what I'm about.
Sure. And Michael, a little background on yourself, and there's Michael Filighera, and a little background on what's going on by you.
Sure. Good morning, good afternoon, and good evening if you're over in Europe. My name is Michael Filighera. I am the proprietor, owner of logicalsignals.com and tradershelpingtraders.com. And what my background is, again, as Norman said, I actually also started as an options market maker here on the Pacific Coast Exchange. I've traded here, London Traded Options Market, the European Options Exchange in Amsterdam, and the DTB, which was the German exchange, or still is the German exchange. And then I returned here to the United States and went back to the PCX. And right now, though, so about 2013, I decided that I no longer really liked the volatility in options, and I liked it more in how it was being played out in the futures market. So I decided that I would change gears or switch gears, and I became a day trader. And my focus now are the futures markets.
Yeah, there's plenty of volatility on many of these markets each day. And then, of course, when you go home with no positions, you don't have overnight risk. So there's definitely, between the options and the short-term trading, a lot of opportunity there.
Sure are.
So, all right, well, let's start out with the question that we always start out with on Mondays, and that is the S&P opened up at 45.43 today, and you've got about a 12-point head start if you're bullish. Do you think it's going to go up, down, or sideways by Friday? And since there's 9 million stocks coming out with earnings, what a great time to ask this easy question, right? Yeah. So, Norm, we'll start with you. Slam dunk it in there, Norm. Where are we going, up or down?
Well, this is really, the old expression of you really shouldn't be fighting the tape. And I got to tell you, the tape looks like we're going higher. And so that's my feeling. I think a bias toward the upside is just going to continue. So that's where I am with it. I think we're going higher by the end of the week.
Yeah. And Michael, how are you feeling?
Being that I am your natural, normal, contrarian trader, That's the old market maker talking. I actually think that we were going to start this week up, but I believe we'll finish the week lower.
Yeah. Market makers always like to fade the volume. So you see all these people buying, somebody's got to step in front of it. Market makers generally are that guy, right?
Well, that, but I also love to sell premium. And if I'm selling enough premium in the options, I'm buying the underlying. So I could be helping along my, the upside versus actually being more supportive that I think the markets. But I actually believe that Wednesday, we got the Fed on Wednesday.
Yeah. Yeah.
So,
and
I
the
think that would
statement
be the turn.
could be one where the hot coffee is set out to everybody. So that could be the big key day. And then you got some big, tech stocks. If they don't come in with the blowing out earnings, it could be a different story. But we'll see. Norm, anything else on the horizon that you're kind of looking at, or do you want to philosophize a little bit about how you help people with the mental?
Well,
part,
I thought, I appreciate that. I think I want to ask Michael a question. I mean, you're looking for a higher start to the week, a lower finish to the week, and you've pointed toward the Fed announcement in the middle of the week being the fulcrum or whatever. I mean, that's the fundamental reason why there must be something technically that you think is going to happen there that is going to cause this turn. I mean, is it the beginning of something serious, or do you see it as a just a correction?
No, sir.
Yeah, Michael, you want to share your screen and you could present the evidence you see. So maybe if you share your screen.
Let me go right over here and go to this screen. And
it's always good to see what people are seeing.
So you can you now see my S&P?
Yes. Yep. Oh, okay, yeah, perfect.
I am going to go to the largest. Let me see if I can do it out here. I can. So this is my weekly, and on my weekly, what I'm showing is that for the past 9 months, every show that I've been on, I've been discussing that the indexes are putting in a primary degree B wave, which started right there in October. So at that October low, we finished a primary A wave, we began a primary B wave. What that primary B wave will consist of is an intermediate degree, which is the yellow, A, B, C. So we've done A, we've done B, and we're in C. So what's going to come in? I'm going to go down to the daily, which should show me the internals here. And now we're in that intermediate C wave. What's going to consist of? It's going to consist of 5 waves of minor degree. Those are this color. So we've already completed 1, 2, 3, and 4. We're in minor wave 5. And within minor wave 5, what's going to be inside of that? 5 waves of minute degree, of which we have 1, 2, 3, and possibly 4 done, which puts us in the 5th wave. And where do we start to find resistance? 46.26, 46.45, 46.70. Can it get there by Wednesday? Well, probably. Can it get there after Wednesday? Depends on what the Fed's going to do. But all I need to see is for it to break above 46.09. And then this is all done. And it's really been a 9-month going on 10-month counter trend rally. And so when it's done,
a window, Michael, real quick, a window of what you're looking at is 46.09 to 46.75. Would you say, or 46.50, 70?
I would say 46.70. I have to include these fibs are based on comparing some internals, and the first one that is this level and then this level is where minor wave 5 is compared to minor wave 1. So that's why you can see this strange little line going up to there. So what I look for is what is the most common relationship between a 5th wave and a 1st wave? Is that is equality. So you'd be looking for minor 5 to equal minor 1, and that sits right here at 46.45, give plus or minus, right? Now, then inside of that, I have one more that I can add once I can confirm that we've bottomed in a minute wave 4. Then I'm going to go inside here. Let me bring it down again to my hourly chart. I will go inside here, and I've done that. And I just put it here because I thought, okay, we started to go up. That was Friday's low. And if that completed this small fourth wave, then we're starting to go in. This is one, that's two. We're in the third. What's my first level? Well, if I'm looking for minute wave 5 as comparing it to minute wave 1, the first one is going to be equality. And that's way up here. What's the second most common? 0.618. That's way down here. So what becomes more important?
I like 618.
Yeah. Many people.
Well, I think historically it's been it's pretty a good number to work with.
It is actually, and it comes up over and over again. But you're not the first to kind of said it.
And where are you at on that? Where's that? 4625 or 45?
It's actually 4627 if we just round it up.
All right.
So you could say 4625 to 46.
I don't need the street address. I just need the county of where we're going, you know?
Right. So right. You're going to say 4625 to 4630. How's that?
Yeah, sure.
But what I want to add is what becomes more important is the structure. So if that ended 4, what I'm looking for is 1, 2, if this is 3, 4, and a 5. Once I can count 5 waves up in a small degree that we have, makes no difference, I'm going to say it's done. So primarily, I absolutely look for this smaller fifth to get itself above the third, which is 4609. Once above there, it's structure. Here's the fibs, which it can, historically, those are the levels. So, but it'll be more structure. And I just think that we're close. We are very close.
Is your RSI telling you anything? Is your RSI telling you anything as far as divergence or overbought? The RSI, is that helping you?
Well, actually, I'm on my hourly RSI. We're kind of getting back up there. We don't have enough strength yet to actually push it above, but you can see kind of went. Now, the other side of this count, folks, is that if it doesn't and it fails and it comes shooting back down and it breaks below 45.24, it's done. Without going up and making a new high, then this 3 comes down to here. This 1 drops down to here. I mean, I've done the extensions, but if it all fails, then the extensions have also then failed and it gets put back in, and 3 comes down to here, that comes 4, and then you got this beautiful 1, 2, 3, 4, 5, and it's all done there. That remains very real.
Yeah, I'm glad you gave the alternative, because I've always found that Elliott gives you a nice general probability, but analysts, as yourself, and you're one of the big time guys that are doing this. It's always about letting the market define which wave we're in and kind of guessing, not guessing, but measuring the probability. And also Elliott people, as yourself, are always looking for rejection.
And that's the exact term that I use, Norm, rejection. Yeah. If it gets up there and it's rejected. So let's just say, for the sake of this conversation, that by Wednesday at 2 o'clock, we're sitting at 4610, 4611. The Fed makes their grand announcement. They're not going to raise 25 basis points. They decide they're going to play catch up and they raise 50. That would be the shock to the market, right?
Right.
I don't even know. I haven't heard anything of what people are expecting. But let's just say that they're thinking, okay, what if they come out?
Well, 2 quarters. I think pretty much expecting 2 quarterly moves, two 1 quarter moves. But if they, your scenario says, hey, let's do it all at one time, which is a possibility.
Either that, or we got to play catch up.
They are taking a month off in August by going to Jackson Hole, so it's really the next 2 months they'd be doing.
Right. So, or from what I understood, from what Powell said, by the end of the year. So that gives us an August meeting, September meeting, et cetera, et cetera, et cetera. So we got a lot of meetings that they can fill in the blanks. And they're not going to be held to say, well, we only said 2, but hey, we think you need more. So, there's so much that goes into all of that. So, but my point is that if we're looking for rejection, If we're sitting up there and we're right at that level, it's like, okay, do we break and we go up to 46.50 or 46.30, et cetera, or is this all going to be rejected? The rejection, now, folks, I'm not talking like we dropped from 46.10 to 4,600. Oh, it's been rejected. No, I'm talking like it slides. It just moves and goes lower. I don't really have any examples on my hourly chart. I mean, I have a few, but I'm talking about it just goes. It is rejected. So a sell is hit by another sell, which is hit by another sell. And so what we're seeing is that a lot of traders, a lot of asset managers, everybody else, we're getting out. We're moving out. That was the signal. You're rejecting. We're with you. They move out. And that would be, to me, giving more confirmation of the wave pattern being complete and the turn is now happening. So
yeah,
no matter
you get
what,
Microsoft and Meta and a few of these other stocks reverting to the mean a little bit, and that's the scenario that would make that correct.
Absolutely, because you have to consider, it's like, I'm not against any of these companies. You know, I think NVIDIA's got a hot chip and everybody wants it. I think Microsoft has been a steady, solid corporation. Innovative, coming out with new product. They're building different areas within, et cetera, just like Amazon. Not a bad company. But at what point does something become overvalued? At what point does the market get ahead of itself? Is market ahead of
now
itself?
you have the inclusion of the AI hype, which has given every company
Absolutely. So is
more
so
upside
are we
potential.
really so I ask you guys, both of you, are we now confronting where we've seen the .com bust, right? That all went to you know what? Then we had the great financial collapse in 2009, which saw corporates get hit beyond words. Are we really done with the banking crisis? Is there nothing else? So everything else is now healthy as can be? Or do we really start to factor in that the commercial real estate market is going to hit the skids? Because we need to continue to raise interest rates to get a hold of inflation. And at the same time, we've got a lot of corporate money that needs to be rolled. Mm-hmm. They need to put on it, they need to redo the loans. So what are we really looking at?
When these guys announce their earnings, you get a better idea of what the AI revolution is actually doing to earnings.
I agree.
And I think that might set the, obviously, if it's
I think
propellant,
it's like,
we keep
I
going,
believe
we
in
keep
it.
going.
I believe in it, but I think we're ahead of it. We're ahead of ourselves. Oh my God, we got to get in. Look, and why? Because the CEO of NVIDIA, look what he said. We're going to outdo everybody. What had happened to the stock? It went up $100. And they've been charging for it. Now, I have one other thing that I'm actually going to discuss on Wednesday, but Jim, you're the moderator, so you direct us where you want us to go on this
one.
Well,
the one other thing I was going to say is with regards to the Bitcoin seems to be falling apart pretty good here today. Is that, do you ever look at any correlation between that and any of this
I think
tech stuff? Is it a forerunner or is it a laggard?
I think what's coming up now, what I've read is that there's, I think BlackRock and probably, a few other of the bigger players are designing ETFs, Bitcoin ETFs. And similar to,
they just want to have their own deal. Yeah.
Similar to like GLD, where as you're putting money into this particular ETF, then X amount of Bitcoin is actually being pulled and put into an account to represent your investment. Now, as we know with GLD, it's not one for one. So you're getting a promise of delivery. Jim and you and I've had this conversation. Well, that's how they're designing the Bitcoin one. So what's that pop over 30,000, right? So really what it comes down to, if you're going to be the manager of the ETF, the asset manager of that ETF, you got to have some Bitcoin already to start. So was what really pushed it up over to 30,000, maybe closer to 31, and now it's coming back? And now we wait for the next one that's going to be managing an ETF. Oh, we need some Bitcoin. You better go buy us $10 million worth of Bitcoin, or however, whatever that number is. And then
I thought it might be just giving an indication of the speculative fever is breaking in that, and the speculative fever.
Well, that's why
I
had followed it and realized, well, why are they pushing this above 30,000 in this? For a while there, we were considering, is it really getting that, catching that flight to safety bid like we see in the bond market? If the equity markets are going to turn and start heading south with some velocity, we're going to see a lot of money pull and go shift it over to the bonds simply because they're perceived as safe. We're going to see it shift over to gold because it's perceived as a storehouse of value. That's what they're trying
and
to
they
do.
are putting it into energy and financials and materials, and so that is a little bit more cyclical and a little bit less overvalued than the other stuff is. Or
materials I can see because of the infrastructure package, all that infrastructure stuff.
I believe there's a lot that we can learn from the past when we're looking at, the market, I think, has been propped up by a series of positive things that have gone on. The most recent, of course, is the whole AI boom, and the fact and the big promises that you just mentioned, Michael, just continues to feed these higher prices. Now, this is not different than what's going. We can learn from what happened with Bitcoin, where there were no believers. And it was a crazy thing. A few believers, it went up with some of the more speculative individuals that went in and tried to be early in something that possibly wasn't going to happen, but at least if it was going to happen, they could make $1 million for every dollar they put in. The market went up, came all the way back down to 15,000, and now it's halfway toward its 60,000 peak. This is the kind of thing that I would expect from the whole AI sequence. We're now seeing the big rush in the beginning. I think there'll be a correction where all of a sudden, and we're starting to see pieces of it. Regulations getting in the way. There'll be other countries that are that refuse to use it because of privacy and protection. And you'll see the market come down, and all of a sudden the believability won't be there that it's any time in the future, near the present, and AI is still way out. And then somebody will come out with something great, and it'll start to go. Similar movement to what we're seeing in Bitcoin. Bitcoin is here to stay. And they're even one of the presidential candidates who go unnamed is talking about using Bitcoin like they use gold to be a basis for the value of the US dollar. So some crazy talk coming out about what's going on.
It's not so crazy anymore, Norman.
That's what I'm saying. The crazy becomes possible and then becomes reality. So it's right now there is no, where the dollar is based on the goods and services that we're able to produce here. So there is volatility coming, I think, from all of these things that we're talking about. Because Bitcoin really is really new. It seems like it's old. There's going to be continued volatility there. They're still looking at the 60,000 high, like we looked at 850 as the high in gold, and now it's twice that. 10, 15 years ago. These markets are going to really start to have amplified moves, which brings me to the attention of the trader being solid in their planning and solid in their mental approach to be able to follow that planning, because this is a market that you'll either get rich or you'll get killed.
That's true, and I think that a lot of it is going to be timing. The fact is, it's like, we just got to go back to when Bitcoin received the AOK to get a future. When that Bitcoin future started trading on the Merc, that's when it went to $69,000. Everybody moved in. Everybody had to have it. Then players, you've got to actually have Bitcoin somewhere, right? And so now that that's kind of worn off, it came all the way back down, as you said, Norman. Now it's moving up again because of the perception that, oh, now we're going to have ETFs, Bitcoin derivative ETFs. So what's going to back it? Well, Bitcoin. Well, we got to go get some to do that. It's no different than what we've seen in so many other things. But I think everything comes to fruition when we're talking about the artificial intelligence. It is a good thing It is totally undeveloped right now. So we're still in that development stage, but everybody jumped way ahead. And what everybody got they got off on the wrong foot, so to speak, was with NVIDIA's last earnings.
Right.
They were not expecting somebody to come out and say, this is the best thing since sliced bread. In fact, it's the best thing since, thin sliced bread or whatever you want to call it. And that stock jumped $100 immediately, short covering, whatever you want to call it. Stock still went up and then continued to go up the next day and continued to go up, because what then jumped in is this dispersion trade. And I don't know if you guys are familiar with the dispersion trade, but it's not used by a lot of the little guys. These are big banks, big trading firms, and that's who's in there trading the 0 DTE options, and now also taking advantage of this dispersion trade. And if we just think about the action, the dispersion trade that's actually still in play, which I'm surprised that you're still doing it, is they sell the index volatility and they're buying the component or the underlying volatility. So what's the action that's going to happen if I'm selling vol? If I'm selling the VIX, what should that index do? That index is going to go up. And where am I now buying the volatility? I'm buying it in the underlying. Well, what are they supposed to do? They're going to go up. Not go down, they're going to go up, because if I'm the trader or the market maker in that particular stock, then in those options, I'm selling you the volatility. I am going to sell you the volatility. I'm going to buy the underlying.
Yeah, I
And
mean,
that we
moved
saw.
that's right. I mean, we moved from, like we're seeing in Bitcoin, we moved from doubting it to accepting it, which is the stage we're in right now, and crossing over to the potential of it. That's where the money gets made.
So I think it is like there's a fair chance it'll pop back above 30,000. It'll stay up there and continue a run. I mean, I'd have to go way back. Let me go look at the daily on this. I have to go back. Let's go look at a weekly. Yeah, a 3, there's a 4. We're just starting a 5th wave up. There's the A, the B, the C. So I can put an intermediate wave 4 down here. I haven't updated this in quite a while, as you can tell. So it bottomed along with everything else and at the October low. And now we're doing 5 waves up in Bitcoin, and ABC up in the markets, in our indexes. But Bitcoin ultimately should go back above 69,000. If I'm following this, now it's not going to do it overnight. It's not going to do, don't forget, I'm looking at a weekly chart. This is October 2022. So we've gone from that 15,000 to 32,000 in that 9 months. Now, if we're going to double again, should it take another 9 months? Yeah, that's probably a fair assessment. 9 months to a year. And a lot's going to happen in between there. A lot's going to happen to interest rates. A lot's going to happen to the economy. A lot's going to happen across the board. And that I get from my larger Elliott wave counts. And it's just incredible, because to see that it's all coming into fruition now, just on the various levels, and what comes next. I mean, if just to really what I look at is, it's like people say, oh, you're always bullish, you're always looking for a top, you're always bearish. It's like, no, I'm neither. I'm following an Elliott picture. Now I got a bunch of noise up in there so you can't see it because of all the fibs that I got running. But there's the 2009 low. So this whole rally to finish a very large super cycle, which I can take you out here. And now I'm going to show you where it started. I can't because it's future. Hold on. This one's important. That's when it started. And let me just tell you the date, folks. May 1st, 1932. That's when this super cycle wave 3 began. Off of the depression lows in 1932, 1933. 90 years it took to get up here.
Look at that B leg.
Yeah. And here's the funny
Hey,
thing.
Michael, since we're
Yes, sir.
on the idea that you were showing that the Bitcoin could have quite a bit of potential to the upside, let's roll into gold and silver and see if there's that kind of potential there too, because it's
Damn,
doing
that's
the creep.
a great
But,
segue.
yeah,
That was a great.
Yeah.
So I'm just going to put up my monthly in gold, which I presented and did an update over the weekend, by the way. Available on YouTube, Traders Helping Traders channel on YouTube. Gold, big picture. We started, now, Jim, this was 1999. We started this cycle degree fifth wave. Okay. What's inside that cycle degree fifth wave? 5 waves of primary degree. There's 1, there's 2. We're in primary 3. Now, something I need to add so that people have an understanding. Normally, if you're following Elliott and it's in the equity market, it's your 3rd wave that's going to be the longest and the strongest, and subdivide and just extend. In gold and precious metals, it's the 5th wave. So we're just in this normal wave, primary wave 3, pretty much normal 1, 2, 3, 4, 5. But now I'm going to bring it all the way down to my daily. There's the 4. So I'm in the intermediate 5th wave to complete this primary 3rd wave. And then again, I'm subdividing. So I'm in wave 5, which is going to be the long one. That's going to be the strong one. And what's going to be in the intermediate 5 waves of minor degree. 1 and 2 is all I got so far. So I'm starting minor wave 3. What's going to be in there? 5 waves of minute degree, of which I only have 1 and 2. So it's subdividing. Now, there's the first subdivision, and it's getting ready to complete the second. So we got a 1, 2, 1, 2, 1, 2. You know what comes next? 3, 4, 5, 4, 5, 4, 5. So when I take a peek,
give a couple of key numbers. Keep a couple of key numbers. Like we start breaking above.
I sure will.
19,
I got the first ones I got
2050.
coming up. 2158 to 2160 to 2175. 2320 to 2375. And that's just the start. Let me go out to my weekly. Here's where I expect intermediate wave 5 to kind of finish up. 2575 to 2716. Now, guys, it's not going to happen overnight. It's not going to happen in a month.
No.
Consider that I just showed you where this all started was 1999. So right now, I think, yes, once the rally does kick in again from here, we should easily get ourselves back above 2000 and start heading up towards this existing high. Basis the futures market,
which is really a triple high almost.
Right.
Exactly, but you're right, because if we go,
we've been up in that neighborhood 3 times. Yeah, 3 times.
And this one basis the August contract broke the 2100 mark.
For anybody that's not familiar with Elliott and you're looking at this and you're totally confused, understand that with Elliott, this is my experience and experiences of others, traders, experienced traders who all of a sudden turn to Elliott for some guidance because of its universal acceptance by big money. As Michael is explaining this, don't think you're confused. Follow along with it, because Elliott is something that clicks, and when it clicks, all of a sudden it all comes clear. Now that may take people a week, a month, a year, but I think any trader, especially with large amounts of money trading, I think needs to respect what Elliott Wave is foreseeing, and therefore it's important to just allow the explanations to sink in and let that click happen. So don't turn away because you may be confused about this. Just listen, just keep on listening and learning.
Yeah. So gold has got a very
smaller traders could certainly benefit, because you catch a ride from 1900 to 2500 on gold, even a small amount would work out pretty good for you.
Absolutely.
Right. And there are so many, as you know, Jim, and you talk about so often, which is great. There are so many different vehicles, and where even the small trader, you don't have to go buy a future. That's a lot of money. You're talking right now, you're talking at 100 and $197,000 for one contract of gold, right? Because it represents 100 troy ounces.
Well, they do have the micros now at 10 ounces. So, some people.
That's true. So you get even better. But you can go GLD. There are many different ways that you can participate trading options.
Mm-hmm.
There's also there's a lot of ways that you can participate in gold, even if you're looking
Mining
to
shares,
buy it and store it. You want to take it and you want to just keep that position for the long term. There are ways to even do that, but I'm not going to talk about that here because that's not what we're here for.
Well, Jim was.
Well, let's switch over to silver. I know Norm likes silver. He likes value.
Yeah, I do like silver, although silver's been silver's been lagging recently. I do want to say that, before we got on, sometimes we do our best stuff before we actually go live. But Jim, you were talking about some of the things that are going well for you, and I just kept on thinking commodities. Right. that are going. But
one reason I've really zoned in on it is the M2 money supply bottomed in April, and now it's rising. Mm-hmm. And it topped in 2021 at 27% M2 growth. And the first couple of months, it only went from 27 down to 25, but it was on its way to negative 4.84. Here we're going from negative 4.84, which is a historic low on M2 money growth, and now it's at 3.0. I don't know if it's going back to zero. I don't know if it's going to go back to plus 15. But I do think that commodities enjoy the M2 money supply rising. And I think that's something that's a tailwind for it.
Well, inflation tends to roll from one area to, my house has been up about 10% in the last month and a half. Inflation in real estate pricing has been taking hold. When that's over, you should see the run in what we're looking at right here, silver and gold and so on. It tends to roll out. I mean, they're talking about the inflation now at 3% and not at where it was 7 or 8 or 9%. But really, the pockets of inflation for the different segments of the economy and I think I'm expecting to see a nice move higher in the precious metals. I think Michael would probably.
And the energies are starting to knock down some walls too. It knocked down 70. It knocked down 75. If it knocks down 80, I don't see a whole lot holding it back. On crude.
Well, I think that's a little bit different from the standpoint that you can substitute one kind of energy for another. I'm noticing, if you look at natural gas, it's way down, although it's trying to bottom. If you look at the crude, it's trying to knock on the door of an upward movement that's extended past the range it's been in. But I think that we're going to have that handoff over the next 4 or 5 years of crude to natural gas, with all of the fracking.
But you also have, the reason I was mentioning the Goldman Sachs Commodity Index, the symbol is GDU on the futures, but you have to hit like a 10-year graph or a 20-year graph to get a good number. That shows you that we were at 140 or something like that, 130. We dropped all the way down.
What was the last letter?
800.
Jim?
It was at 850. GDU is the symbol that I use.
Thank you.
GDU, Goldman Sachs Commodity Index.
There.
It's half of it is oil. The other half is mixed with metals and grain. And so, I'm seeing this as possibly bottomed out and possibly turning back up. So can you see the Goldman Sachs Commodity Index? It's, again, I know why it wouldn't be the same. GDU is the symbol that I use on my machine with bar chart.
Coming up, Goldman Sachs.
There it is right there. I just saw something that said, that's short-term something. Oh, anyway, anybody could look it up. It's the Goldman Sachs Commodity Index, and it speaks for itself. And just remember, about half of it is energy, and the other half is metals and grain. You can see it went from 850 down to 500 and change, and now it's trying to go back to 600. And if that's an indication of commodities turning, then it could be something to keep an eye on.
Mm-hmm.
Just a quick.
And that would open the door to the energy stocks, the metal stocks, the grain
you'd
stocks.
Asked about you'd asked about silver, and I want to make sure that you got this look.
Sure.
Because I think both of you guys is what you're looking for. Same deal.
Yeah.
Same deal. We had that, and this one actually bottomed in a cycle degree in 1991. So this has been we've got 9 years plus 23, so it's already been 34 years in the making. So it's not that it's lagging, it just takes a long time for these big things to go out. So here again, there's that. But here, a little bit different of a count. It's only an intermediate wave 2 is only complete, so we're an intermediate wave 3 up. And again, we're getting that slow start, 1, 2, 1, 2, 1, 2. So I think that when we start to break, we're here, we got 26, 21. That's like really low.
And that's a key number.
50.
That's a key number. Yeah.
Yeah. But 27.50.
Yeah, actually, the gold has a key number. Key numbers as well. They're both
key
numbers
like
as well.
Oil. They're all right against that resistance.
But where
So
I'm thinking
it's going to be
that
exciting to see they're very current.
this even on a shorter term basis, right? We're looking like a month or 2 or 3, 32, 32.50.
Yeah. I mean, this may look high to a lot of especially new traders, but those that have been around remember in 1980 when silver had prints above $50. They were momentary, but they were
Right
prints nonetheless. Yeah, they were. I guess this is allowing for inflation. Is that what I'm looking at? Is that
This one in 1980 was the Hunt brothers.
Gotcha. Right, but what I'm looking at the peak, the most recent peak that matched that was
in 97. Oh, excuse me. I take it back. It was 2011.
2011. Yeah, gold popped in that. So the potential here when you think about going from the mid 20s to the low 30s, that's real potential, and that's big money. I mean, those are big contracts, and so 5,000 ounces per.
Right.
So be very careful there.
Right.
One of the things we used to look at years ago to figure out inflation was the price of the stamp. And since Biden got in, it's gone from 44 cents to like almost 65 cents. So we, and they used to show how a stamp used to be 5 cents and then 20 cents. You know what I mean? So it was a way of looking at inflation through a very simplistic term, but obviously it was indicative of growing prices over that period.
Well, I was always.
We all know.
I was always amazed they could get a letter from New York to California for 20, 30, 40 cents. I mean, how can you do that? I just never understood that. Now it's coming to more of a reasonable price, I think.
Yeah. But it's and the houses have all gone up, and you go out to dinner, and the $100 steak is certainly not a weird thing, and the $20 cocktail is commonplace. So the world is more expensive, and maybe that's why the gold and the silver may get on their horse at some point, because it'll just adjust to the current cost basis of things.
Funny, because we were talking about the dollar earlier, and I think that the dollar index is just like getting cooked. Now, this is a
Norm. Norm, is there any way you could chime in here a little bit? Because I know you follow the yen, and then while you explain the yen, you might also explain to people how you kind of try to help them with discipline and things like that.
Yeah, well, I like the idea of creating the Japanese yen because of its lower basis. Currencies, I mean, look at this chart. I mean, currencies tend to ride a trend for a reasonably long time. Once you identify a trend in currencies, and the Japanese yen has been lower for a very long time, and after the euro dollar has come down from I guess it must have been close to 140, 150, coming all the way down to below par, and now struggling its way back to 110, 115. These movements tend to be very consistent, and I really like it, especially for new traders. Because it's a very reasonable contract. A movement of 100 points in the Japanese yen is only $125. Same with the euro dollar, but the euro dollar has a higher basis. So new traders looking at a lower basis and being able to take advantage of trends that generally are very consistent. The Japanese yen is a very tradable currency, and so I would suggest that new traders don't ignore. And for forex, it's the Japanese yen against the U.S. dollar, and I just find it a very consistent way to profit if you can zoom in on the action in the Japanese yen. Once you get good at it, then you can move over to the euro dollar, where where the movements can be just as consistent, but the basis is higher. Therefore, the same percentage move means a lot more money one way or the other. So start off slow with the Japanese yen, terrific contract to trade, and then move on to some of the larger currencies.
I think the Japanese yen might be heading towards the October lows. October 2022 lows.
Yeah, that's the basis consensus. I mean, look at how nicely it moves. You can draw that trend line on the top, and it's you can see that it most traders look for it to match that trend, but sometimes these markets never quite reach it, and you see where we're turning back to the trend right now. In the last few couple of weeks. So yeah, I think
the fibs do show it. They're comparing what we're putting the extensions out for what this could look like, right? Compared to that, and it's down here, and there's the current low there, so it's going to go just below it. So you're absolutely spot on, Norm.
And well, the other thing, if you conversely, when there is a correction, when there are corrections in the stock market, I always look at looking at some long positions in the Japanese yen on a temporary basis. So I find it to be a pretty good. Now, it's not all the time. You just don't do one because the other one's happening. But when the stock market is going higher, you can look for a weaker yen, and that's certainly been playing out here.
Yeah. You want to look at that euro because for whatever reason, the dollar has picked up quite a bit of steam in the last 5 days. Maybe it's front running the statement from the Fed that might be a little bit more stern than people thought. And maybe it's the lousy numbers out of Germany, 38 number on their manufacturing. I mean, under 50 is recession. What's under 40? Bankruptcy?
On this thing. And if it holds 10.63 or whatever that high is right there,
yeah,
it should go up again and put another additional high above 131.
What's the green? What are the moving averages using the green and the yellow?
The top one is a 5 period. The next one is an 8 period. The darker blue is a 21 day, and the orangey goldish one is a 55, and these are the 200.
Yeah, the 8 right there is the one that I use most of the time, the gold one, and you can see how nicely when it takes a direction, how it nicely stays under that. I mean, it's doing it also on the 5, but you have a couple of breakthroughs which makes some people nervous. But that 8, look at how it hugs it so nicely during that from 5 in May, where it just did a big jump. Now that it's turned around,
this is on a daily, which makes it a little bit more difficult to trade unless you're a daily trader.
Right. But the 8 works.
That's your entry. Your entry is there.
Absolutely.
And then your confirmation comes on there. But guess where your stop is? You can just walk it. Your stop would be right there. When it breaks back above, you're out.
Yeah, I mean,
if it did.
That's hard, and we've talked about this before, that we're too accurate. And now you can look at this so many different ways, but that entry point, that's our loaded gun. That's our loaded gun trigger, where you have hesitation, where you have a series of small bodies there, followed by a movement through the 8 with some power that usually leads to an extension, at least to the length of the body of the extended candle, and you're seeing we've already reached that. So scalpers can really have some nice.
Yes, they can. And this is a daily chart. You can move this down, put it on a 15-minute chart, and you got a whole much more fun. Look at that.
Yeah, I mean, look at, there's another loaded gun shtick there. Yeah, it's and you're seeing another one on the bottom there, where down at what is that, 2 o'clock. Where the green candle that went above, well, I guess, where it goes above that particular moving average. And look at the other one, that 6 candles from that. You had a nice run after it passed through the 8. That green one right there. So I think there's if people listening, find something that works for you, that makes sense to you.
Yeah.
And trade based on it until further notice. There are no two traders that are alike. I mean, listen to us. We're coming in at 3 different angles, but we're coming primarily to the same conclusions. So, don't try to copy somebody else. just find the right thing for you. And
For you, exactly.
yeah.
That's really good advice, Norm. That's very good advice. It's because what I do may not fit somebody else, and what somebody else does may not fit me.
Yeah, and you're going to
My
believe
style.
it. If you don't believe it, just because Michael's right most of the time doesn't mean that you're going to be able to follow it, because it's got to be right for you. You have to understand why, why Michael's right a lot of the time, much more right than wrong. Why? Why? And if you can understand the why, then when Michael has a misstep, you're not going to jump off to some other guru that you don't understand. Understand what you're doing. Understand the why of why you're doing it, and then make a commitment, within reasonable risk parameters. That's what trading's about.
Yeah, I agree.
Yeah.
Back to you, Jim. I'm sorry, we kind of hijacked
Well, I
this
was
one.
just going to say, we're going to get close to the top of the hour here. We all have some shows coming up this week. So, Norm, why don't you discuss a little bit about what time you're going to be on, and of course, what you're going to be discussing at that time.
Well, I'm glad Michael's given us a pulled back view of what's going on, because I think it spells opportunity. What is that? There's an Asian expression where opportunity and danger meet, and forgot what that word is. But
Art of war.
What is that? Sorry.
Art of war.
Oh, art of war. Yeah. What happens is you have a lot of opportunity, but you're also going to have a lot of risk here, and therefore. This is a time to really take advantage of what may be some big moves here. And so in my presentation, I'm concentrating on on traders who are trading at least $25,000. I'm going to be zooming in on some of the bigger traders. I say bigger, they're really not big traders, but a lot of people entering the market, trying to take $5,000 or $10,000 and make something of it. And that's okay too. That's how a lot of people start. But if you're there already in that $25,000, $50,000 or more, you've got to make a commitment to the mental and emotional capabilities that you have, and putting them into play during this, because you're going to be tested. So my presentation is some of the tips that I can give the larger traders on how to stay focused. I'm going to be making an offer for unlimited coaching for the next year, because the next year's period is going to be one of great opportunity. And I want to be there for you from a mental and emotional standpoint to keep you strong when the opportunities are there. So that's what my presentation is going to be about.
Excellent. And Michael, what are you going to be covering? And
I think I'm going to cover what Norm's doing. No, I'm joking. I think it's a great topic you've got going on, Norm. Mine, and I'm titling it, Are Derivatives Becoming the New Underlying? And I've seen a lot of things happen with the solid introduction and the wildfire spread of zero DTE options. And I think I've had to give up the concept that are we bullish or bearish? I think those are just terms that we use, and they do become applicable to the market. But I find that to say that I'm bullish or bearish just really pigeonholes me. And that's not who I am. That's not how I trade. I trade price action. I trade the number. And so when we're putting together an options trade, they're not pulling it, they're not buying calls or selling puts or doing whatever you think they're doing because they're taking a bullish or bearish posture. It's the numbers. So if you understand something as basic but as complex as the dispersion trade, as basic and complex as to how delta and gamma come into play big time and zero DTE options, and gigantically within our indexes. So that's the SPX, the ES, the NQ, the triple Q, the TQs, the SQs, the spiders, et cetera, et cetera. And we continue to see this play, or I do. I see it move in, but it shifts. It goes to a different grouping, this dispersion trade. So I'm keeping very close eyes. But what's really going on when we were thinking, well, we had the index and then the component was the underlying. Or in an option, if we were trading in the calls or the puts, we then had to hedge with the underlying. Well, if the options have become the underlying, then we're hedging with the stock or the index or whatever. And also having an understanding that now that we have a volatility index, which we've had the VIX forever, but now we have a future on it. Then we have a future on the VIX, or the volatility for the NASDAQ, for the volatility of the Russell. Then we have for volatility of the volatility. Then we have the short-term vol. Then we have the zero DTE vol. They've come up with all these new products and they're massively traded. And what effect does that have on our day-to-day trades?
Mhm.
That's kind of where I'm going to go. And I'm probably only gonna be able to touch the very thin layer of it because we get 55 minutes. And we're blessed to have that. So nothing wrong with that, but it's a much larger conversation, but I'm hoping to get it started.
Sure. Well, as far as option professor is concerned, like Norm was saying, you have to have some kind of methodology, and I'm going to be sharing the methodology that I believe in after decades in this, which includes RSI divergence, moving averages. You know, Norm has his moving average, the 8-day. I've got my own, and then I'm also going with reversion to the mean, because we are entering August, September, and October. And to me, that is the dead zone as far as something's going to be going on in those 90 days. Seasonality is huge in these metals at that time. And of course, we know stocks can get pretty rocky in September and October. So I'm going to be covering how I look at these markets, how I figure out what to do. And of course, with the options, you know, how to trade them on a short-term basis. If you use a very short-term chart, like on Meta, and it goes way up and you start seeing an RSI fading and you start seeing it roll over on some of the shorter averages, you want to take your shot on the put side on a weekly or a few-day option or something. You know, I'll explain how that works. That kind of trading is not for everybody, but some people may have a certain amount of capital for spec that they could use in that kind of situation. And also, once you buy an option, are you going to roll it? Are you going to spread it? Are you going to roll it out in time? You know, how are you going to trade it? And how do you pick the striking price? You know, I have my own opinions on this stuff, and I'm going to share them with you guys at my talk. But the main thing I'm going to talk about also is how I figure out how things are going up or down, which I think is important.
Hey, Jim, I wanted to ask you real quick before we wrap. And Michael, you may have the answer to this question also. You know, the weather is such a big topic right now. You know, as a commodity trader, we used to just always go to the grains, you know, see what's happening in Kansas. And I mean, of course, they're getting cooked there, and of course, what's going on in the war. But is there a direct? Are they coming up with direct weather? You know, ways to bet the weather in? Have you guys heard anything about that? I mean, it's such an obvious
Are there weather futures? Yes, there are.
Wow. Are they? I don't know.
I'm sure.
That's news to me.
I think they've been in existence for a while, but they're of course
thinly traded,
but they exist.
Weather. I'm going to take a look. I'll report back.
WET, W-E-T.
I think something like that, Jim. To be honest with you, yes.
I think that's diaper futures, W-E-T. You may be wrong, but
I think one thing I think we all agree that we're going to be going into a phase here of August, September, and October, and the volatility index is down at 12 and 13, and it'd be a little bit surprising if we left that 90-day period with the VIX still in those areas and nothing going on. You know what I mean?
Something's going to happen.
Yeah. I mean, we've got energy at $77. You know, if that ever jumped into the 85 area, if the gold were to jump above the 1975, if silver gets above 26.20 during the next 90 days, you know, I don't think the Fed is going to be cutting rates anytime soon, and that could really change the landscape on a lot of things. So this is a great time to also discuss hedging. You know, protecting things you might have made a lot of money in the last 9 months.
Right.
You bring up the absolute things that need to be talked about. That's great stuff, Jim. Thank you.
All right, you guys, always great to be with you, Norm and Michael. And again, you guys will have broadcasts this week, so people can catch up on more of what you guys are doing, which is great. And I'll have one as well. So right now I'm going to turn it back to David, and he can, again, fill us in more about what's coming up this week as far as additional information for investors.
All right, thanks, guys. Yeah, the big event this week is we are calling it the Derivatives 2023 conference. It's going to be all futures and options trading. So that will be starting tomorrow morning, July 25th at 10 a.m. Eastern time. And we will also have, the event will extend to Thursday. So it's Tuesday, Wednesday, and Thursday, 10 a.m. Eastern until 8 p.m. Eastern. So we're going to have 10 presentations each day. And so Norman, Norman's presentation will be 11 a.m. on Tuesday, and Michael's is 10 a.m. on Wednesday, and the option professor is 4 p.m. on Wednesday also. So, like I said, 3 full days, 30 presentations, a ton of good information and topics all on futures and options trading. And if you're not registered for that yet, you can go to TimingResearch.com/ST, and that'll be the 46th event of the Synergy Trader series. So be sure to join us for that. And just want to also a reminder that for today's presentation and all of the presentations this week, they will be recorded individually and posted on the Timing Research website. Also, if you subscribe to Timing Research on YouTube, Substack, or your favorite podcast app, you can get the recordings that way as well. And so I just want to thank my guests again for today. Norman Hallett of thedisciplinedtrader.com, and Michael Filighera of logicalsignals.com and tradershelpingtraders.com, and the option professor of optionprofessor.com. Thanks, everyone.
Thank you.
Thanks, David.